Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up. And this wrap-up is for Tuesday, the 5th of April, 2022, about just after 7:05 p.m. Central Time. Interesting day. The event of the day came out of left field. It was Ms. Brainerd, one of the Fed governors, the president. And what she ended up doing is talking about in May how the Fed is probably going to have to roll off the balance sheet, raise interest rates, saying nothing more than everybody else did. For whatever reason, the market decided today to grab on what she said, and away you went to the downside. You set off interest rates sharply higher. You took back, by the way, in the 10-year yield on the close, the 2-year was back underneath the 10. So you're not getting day after day where that's doing it. Now, you might get a week where it finishes like that over it, and that could be interesting because traders might call that the inversion. I like to see day after day where it's holding in there, and today backed off a little bit. We have a pullback in the stock market. I was expecting this. If you are interested, I did a special report yesterday. My reports are only up for 5 business days, so Friday is going off at midnight. We put it up yesterday. For you to see it, all you need to do is take your cursor, move it up to the top here, give a click on the icon that you see, fill out the form, and you'll be able to view that. It's about 20 minutes long. I deal with monthly, weekly, daily, price count, seasonal patterns in the S&P. Then I go into the inversion, what causes the inversion, how it typically works, what theme you need to be certain that it's in place, and then another theme that's a filter on it that you don't know about, and I talk about it there, and it's a popular one. So I put it all together for you. I'll be doing more of these reports in metal markets very shortly as well. I'm finishing up my outside day report now. But let's talk about what happened. Interest rates today climbing again. The inversion didn't quite hold. It slipped back a little bit. The dollar went up. Most currencies slipped back on that news. Okay, but nothing out of line here. When you come into the gold market, we've been correcting. It's not something that just began. We've got lower highs, lower lows, and if you take a look here at the 18-week moving average of closes, you can make a run towards it. It's $60, $58 from here. It's fairly far away, though. You're still caught in this nonsense land, as I call it, as to which way do you want to break out of this sideways action. The trend at this point is down. You have lower highs, right, and a lower low. Now, you went into a pause. Let me show you what I mean by that. Here you've got a pretty clean cut, lower high, lower low. You come up, and this was on yesterday, Monday. Today's Tuesday. Now you got higher lows. In order to renew the downtrend, you got to get back under 19, 18, 20. That'll give you an idea that, yeah, the market's trying to bust through again these lows that you've got in place here against the 1900 level. Still has to do it, but that gives you an idea it wants to. If it doesn't and you get over these highs, you got a little bit of a different game going. It could be a trap in here. I talked about that yesterday with you. Where the moving averages. You tell me where this market keeps failing. If you have my morning subscriber video, I've been telling you the pros are selling the market against the 18-day average. They're putting stops over the prior highs, and they're looking to see can the market bust through that 1900 level. No surprise at all. Here's what's keeping the market from wanting to get through part of that. The Bollinger Band keeps narrowing in at 1907.90. So here's what's happening. The Bollinger Band is wrapping its arm around price. And as it does it, typically, it means volatility starts coming out of the market, not into it, and prices start spinning around and going nowhere. You turn into a chop affair. You've got the first phase of that going on, and momentum sort of confirming that in that it's not pointing up or down, it's drifting around. But who's in control? The bears. Until you get back over this high right here, the possibility exists instead of the 1900 level. I'll go with the Bollinger Band of 1907.90 should be the main support if it breaks. When we look at the gold-silver ratio, I'm using June gold, May silver. The fact that the number keeps climbing means silver is weakening against the gold market, and you see that on this chart. Lower highs. Here too, we have a higher low, lower high. Now, if you can get through this 24.38.5, and you just did it tonight already, that confirms you've got the lower highs, lower lows, next support, the Bollinger Band. Why is a Bollinger Band so important? It's important because in most cases you will see this market, the first time it's hit, and I can go back over and over and over, it'll give you a bounce from that zone that you can make a decision on what to do. Markets will trade within the black bands, within them, 95% of the time. Therefore, I want to be the house. I want to be the guy at the other side of them saying, I'll take some premium from you because you're going back into that band. Is it a smart thing to sell the band? Never. Why? What if you latch on just like this? You say, well, it's coming back in, and it did. But trend traders like to sell it thinking you're going to get a big break, and that's the absolute wrong thing to do. And it's the wrong thing to buy it thinking you're going to get a big spin to the upside. You use it to come out of positions. I'll talk about that in my ad at the end of this if you're interested in Bollinger Bands, and you should be. In copper, I earned my salt. I told my traders in the Spider ETF on COPX, out. You got to take some of the money off the table. I did that here in the futures. Every time you're hitting this Bollinger Band, you want to take money off the table. When you're not embedded, you want to take all of it. I know you don't know what I'm saying. Take the course and it'll suddenly make sense. Where the buyer's going to show up? Probably at 470.50. They won't hang around long if you take out 466.90. And they'll be looking to see, can you start mounting attacks and kick the market higher? Right now, momentum's pointing down. Well, that's important. On the close today, you were overbought. Do you see where the market finished today? You have readings in the 70. You've got to take the stochastics out of the 70s, both of the numbers, the K and the D, which is the red and the blue, to get them away from overbought. That's happened. So I expect to see the buyers nibbling on this break. Platinum, I'm still looking for one more finish. It doesn't have to do it, but it's nice when you hit the lower Bollinger Band, and that's where I think the pros will step away. I want you to look at something bearish that's about to happen. Your 18-day average in red is about to get under the 100-day. That's a bearish crossover in this market. And in the palladium market, I said that look for this market to have all kinds of support between the 200, the 100, and lower Bollinger Band. I don't think I missed that at all for you. That's it. It's a boring market to be in at this point. Last, we get to the dollar index, and this is classic Bollinger Band. You go down, this is where the pros in a non-embedded reading, embedded will look like this. And by the way, it can be on the downside if you're bearish. But you get there, you're not embedded, you just got momentum. I think the pros are covering. Now you went up today, hit the Bollinger Band during the day. What do I think the pros are doing? Coming out of the market. Everybody will talk on TV, oh, we're going over the 100 level. It doesn't matter to me. Go there. The money was made. The market's trading back and forth between those bands. There's nothing here that says it's coming out. When it does, there's ways that you try to jump in. And that's what I talk about with the enhanced Bollinger Band course. Not a regular Bollinger Band course. Something different. Want to get your doctorate in it? Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, If you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.